And the most important question we need to ask here is, hey, how's it going, guys? Dan Kitajima back with another episode of How to Grow Your Insurance Agency. Today, I want to do a special step-by-step guide to selling more homeowners insurance. So I got a little presentation ready for you, which I prepared for my team, but I just want to share with you guys too because, hey, who doesn't want to sell more homeowners insurance? I want to go over why we want to do that and really go over how to sell more homeowners insurance. Just to let you guys know, if you haven't subscribed to the channel, please subscribe to the channel. I'm an agency owner here that does $2 million, over $2 million in revenue this year. And with been in the insurance game for over 18 years as an agency owner, as for 15. So just want to share with you guys some of the tips and tactics and strategies that I want to share with you guys to selling more homeowners insurance. So here we go. All right, so first, I just want to start off with why homeowners insurance. We have a lot of products we could sell. Mostly we're a personalized agency, but we also have life insurance, commercial insurance. We want to sell all of those things, which we do. But this video in particular is all about homeowners insurance. So I just want to go over why do we want to sell more homeowners insurance. So here are some of the benefits of selling more homeowners insurance. So there's higher premium potential, which gives our producers higher commission potential, meaning that sometimes, we write the auto insurance and the auto insurance is 6 months policy. So they get paid off of that commission, whereas homeowners insurance is a 1 year commission. 1 year policy, so they get paid off the percentage of that. I'm not sure what your compensation plan is, but that makes a big difference at our agency. Also, sometimes, depending on what state you're in, I'm in California, but some states have pretty low premium when it comes to auto insurance, especially if they don't have any physical damage coverage to it. With homeowners insurance, premiums could be generally higher, and that's what we're in this business for, to write more premium. So homeowners insurance gives us a chance to do that. All right, also there's higher retention. Which means more money for the agency in the long run, because homeowners insurance policies, they stick on the books a lot longer than auto insurance. Maybe it's because auto insurance is always being on the commercial. The rates fluctuate more every 6 months and people are always shopping auto insurance, it seems like. Whereas homeowners insurance, you set it up a lot of times. Many times it's escrow pays and people aren't price sensitive too much to homeowners insurance. It is your biggest asset, so you're not going to be that, it will make sense that it costs money to insure your biggest asset. So people seem to be less price sensitive and the retention seems to be a lot higher, which is, again, a key part of growing our insurance agencies to have policies stay with us. All right, there's also cross-sell opportunities for every lead. At the very least, they're going to have auto insurance. There's going to be a need for auto insurance. Most likely, if they own a home, they're going to have some cars. So that's exciting too. Whereas, if you sell auto insurance, depending on who you talk to, there's going to be a situation where there's nothing to cross-sell. Maybe a renters, but that's even such a stretch because they don't own that many personal property and they just don't see the value in having liability coverage, which is unfortunate. But with the homeowners policy, there's an auto insurance there. There's an earthquake policy there. That in California we have that. Different states may have different policies, but there's just a higher percentage. They may own some boats, trailers, motorcycles, life insurance. There's more value in that because they have a mortgage. So there's just so much more things to cross-sell. So that's what makes homeowners insurance leads so much more valuable and something that you really want to focus your insurance agency to do more of. More competitive pricing. Now that I share with my team just because it's a company represent, but that just depends on your carrier situation and the market. Better product with better underwriting guidelines. Again, that's more of my carrier specific, but that's due to some of the things that's challenges. And homeowners insurance has their challenges too. But especially in California right now, there's a really tough, hard market with auto insurance and underwriting guidelines really getting stricter. So with homeowners insurance, we seem to be a little bit more open. So it does give you some options depending on your state and what other lines of products are doing. You may have a favorable situation with homeowners, and if that's the case, that's great news for you. Less service work. All right, there's not really much that could happen in a year. With auto insurance, they could move, they could switch cars, they may, the higher chance of getting into an accident, billing issues. Whereas homeowners insurance, you set it up and there's really not much they can really ask you to do. So they're probably not going to move, that right away. They don't move as often, obviously. And there's less billing issues because, again, escrow pays or they pay in full, and there's a lot more stability there. So less service work, which is good because your producer is going to have more time to focus on getting more sales and doing a lot of servicing. And then also, you're going to be working with financially stable clients that are, more pleasurable to work with. We love all our clients. We take care of all our clients the same. We have a lot of empathy with their financial situation, but with auto insurance clients, sometimes depending on their financial situation, they're going to be a little bit more frustrated, or they're going to be more price sensitive, and may give your CSRs a little bit more harder time. That's just, something we have to deal with when you're in customer service. But, personally, if I was a producer, I would like to work with people that I could respect, I could learn from even. In California, Southern California, buying a home is a dream. It's a very difficult dream to have come true these days. So could learn a little bit from them, and they're going to be, again, more pleasurable to work with. And not everybody, and everybody's not the same, homeowner or not, but if they're homeowners, they probably had the discipline to save money and to do well financially. So they're going to be in much better clientele to service and deal with on a daily basis as well. All right, so the first thing I want to go over, there's a couple ways to get homeowners policies, but you're gonna potentially be buying leads. Now you also get people on the phone, so I want to separate those two step by step. So the first thing I want to work on is how to work on homeowners insurance leads. And if you could get more homeowners insurance, please put in the comments below, because I would love to get more homeowners insurance leads. They're not, you could get some, but with the volume that I'm looking for. So if you guys have any tips on how to get more homeowners insurance leads, or maybe some vendors, then I'll be happy to have a brainstorming session and talk about how what type of leads are working out to get more homeowners leads. So if it's filled out, then you want to use the information you have to work on your quote right away. You got the address most of the time. So you could check the picture on Google to determine eligibility. Make sure it's not a bad house. Make sure the roof is good. So you could do a lot by just looking at Google Maps and looking at the picture there. And then we have a replacement cost estimator. And you want to fill out the information. A lot of it is pre-filled, but you don't want to assume everything is correct there. Most of the time it's not. So you want to look at Google and do some of the basics. How many stories it is, what type of roof it has, foundation, if there's a pool, garage. So you could do a lot of things to make sure the RCE, your reconstruction cost estimator, is accurate or not. And if it's not, you definitely want to update that. Now, what I tell my staff to do is quote it with basic coverage. Okay, higher deductible options. Because a lot of times, if you're sending out the quote without talking to them, you don't want to just send something with the highest option possible, because that's going to make the price higher. Because if you send something with a lower premium, it gives you a chance to at least get a call back or have a conversation. And definitely you want to go over the coverage in very detail, which we'll go over. But you don't want to just send something that's just out of the ballpark by sending them your best coverage with the lowest deductible and just having the price high. So if you have to send out a quote, which we do at our agency, then we'll go with, 5% separate structures, 40% personal property, 10% loss of use, and, $25,000 or $5,000 deductible, depending on your state. Obviously, that might be even low for different states. But what you want to do is you don't want to send out a quote that's high from the very beginning. All right, and we'll call the client and leave the price in the voicemail. That's our style. Different agencies do it different ways, but if someone's requesting a quote and filled out all their information, then most likely they're expecting you to just provide the quote to them. So I like to just be upfront with them, but let them know that there's so many coverage options and discount options, because the multi-policy discount, there's just so many things that can happen. So we do let the price, hey, here's the quote we have so far, but please give me a call back so we could go over our discount and coverage options in detail. So I do let them know that, this is just a starting point when it comes to the pricing. Okay, you update your lead management system. Obviously, you email them the quote, but the lead management system, I hope you guys have a good one here, because with any product, follow-up is the key. When it comes to follow-up, you want to make sure you have an automated system when it emails them and texts them. Texting them is a game changer as far as the response you get. So you want to update your lead management system, maybe with the price, the city, and then have those scripts set up right. So they know that you're working on a quote and you're letting them know what your quote is and how they could contact you. And also, this is the underrated part about homeowners insurance. Since you have the address, you want to mail out the quote too. That way they get a professional business card. They see the quote. They see that it's real. They see the company you represent. So mailing it out, even though a lot of people may not do that nowadays, I still think it's a great way to follow up and show them that you're a professional insurance agent with a business card that represent, the company that you're providing the quote with. All right, let's move on to the procedures for call-ins. So this could be, that's what we call our agency, but call-ins basically is someone calls us for a quote, or it could also be when you call somebody and you get somebody on the phone interested in the homeowner's insurance quote. All right, let's greet them with enthusiasm. Now, this doesn't matter what line of product you're offering, but you just want to show them that you're very happy, that you're able to quote them. So it's a lot of it is just your tonality of your voice, but I will take it another step further and thank them. Hey, thank you so much for giving me the opportunity to quote your home. I'm really excited to have this opportunity. So let's get started. Say something really early on in the conversation that lets them know that, hey, I'm excited. I'm happy to be able to give you a quote, because people will make their first impressions very early on, especially over the phone. So you want to make that first 5-10 seconds very enthusiastic. All right, so here's the key here for me. Find out their current situation and why they're shopping. What are some of those situations? What could they be? Is it a new purchase? Are they just buying a new house? Okay. Is it their renewal is high? Is there a current policy non-renewing? Okay. Is there a rate increase again on the renewal? Maybe they have no insurance. Maybe they have a paid off house and they don't have insurance, or maybe they have a mortgage and they're getting a notice from the mortgage company asking them, hey, where's your insurance? So there's a lot of different situations they could be in, but you want to find that out. You really want to find that out. And once you find that out, you want to emphasize and exaggerate their pain and let them know that you can help them solve their problem. So a lot of times you do this early on, and even though you haven't gone under the coverage or the pricing, they may make a decision early on that say, hey, I like working with this person because this person could solve my problem. You want to remind them what their problem is. For example, if it's a new purchase, it's like, oh, wow, congratulations. And again, enthusiasm there. I bet you got a lot of things going on. So you got to have your insurance set in place to make sure your home closes in time. So yeah, it might be a little stressful here, but yeah, if it all works out for you, I could take care of everything for you. High prices. Oh, wow. Sorry to hear that you got another rate increase. Yeah, homeowners insurance could be so expensive these days. Again, you're exaggerating their pain. So hopefully I could help you with go over some options and maybe save you some money on your homeowners insurance. That's what they're looking for. Non-renewal. Okay, let them know that, hey, every insurance guidelines is different. Wow, that's terrible. They're non-renewing you. Again, you want to just kind of exaggerate the pain that they're feeling so they'll take more action. And then you're early on, you're saying that I'm going to try my best, or you could flat out be able to say, I'll be able to help you out with this. Notice from the mortgage company, if this works out, I'll be the one contacting them. So let them know early on that you're the problem solver for them and know what their problem is, because if you don't know their problem, you're not going to be able to use that later on to close them. So once you find out their problem, I recommend my producers to write it down, what their problem is, because that's going to come in handy later on in the conversation. All right, cool. So while you're having them on the phone, you're going to pull up a picture in Google, and while you're scanning over the picture, you're going to build a report here. That means compliment them on something about the house. Oh, it must be nice. I see that you have a 3-car garage, or very beautiful house. If it's an amazing house, this is easy to say something nice to them, basically complimenting them and getting them to, build rapport. Sales 101, ask how long they live there and just talk about something that you like about the house. Sometimes if it's not a great house, you might have to get creative there, but you do want to say something positive about their house, because a lot of people take pride in the fact that they own a house. You could let them know that you're a proud homeowner too, or your dream is to one day buy a home too. So, hey, if it's not a great house, or even if it is, hey, wow, yeah, how long have you owned the house for? Wow, that's great. And show them that homeownership is a big deal, and it really is, because it's the American dream. Ask about occupations. Okay, for discount purposes, can ask what you and your wife do for a living, you and your husband do for a living. And that could be a discount there. And that could be also a conversation starter too. So build rapport. Don't just get into the house and just talk about, numbers and coverages. Show them that you're a person that cares. And, right there, what you're basically trying to do is try to be likable, because in sales, the more they like you, the better chance they'll trust you. And then if they trust you, then that is a better chance they'll buy from you. So being likable is so important. It's free. It's really easy to do. So, and you can learn a lot of things from talking to people. So I do recommend to try to start a conversation. Some people are not don't want to do that, you'll kind of sense that they don't want to talk that much about it. Not a problem. You're still showing them that you're a nice, friendly person. All right, same thing here. You're looking at the pictures, you're verifying that information and updating RC if necessary. So here you're saying, hey, I see that it's a 2-story house. I see you have a Spanish style roof. I see it's two-car garage. I see that you don't have a pool, and the foundation looks like it's on slab. So you're just going over some of this information so they know that you're looking and you know where you're getting this data from. So you do want to verify the information with them rather than just having a quiet, awkward silence there. And then you want to say, hey, according to my system here, a lot of quoting systems already has this pre-filled, or you may have to go to Zillow or Redfin, but hey, I see that it's built in 2007. Very nice. I see that's 2,500 square feet. Again, the storage, garage, and you could go into Zillow and look at the bathrooms. Well, you want to, maybe it's faster for you to ask them, hey, how many bathrooms there are? 2.5. Is it a shower only? Because that's 3/4. You want to be you want to be accurate here. Is it a half bathroom, meaning no tub? Is it a custom tub? It's shower and a tub, or guest bathroom half, and get that, accurate there. Flooring percentage. Hey, is it mostly carpet and tile, or is it any hardwood or laminate? What percentage would you say the flooring will break down? Obviously, if there's a pool or not, security system or no, and check to see if there's any claims. There's other things I didn't go over there because this will take such a long time. But depending on your state too, some of these questions are more important than others, like your roof built. So I didn't really go into that many details, but you just basically want to verify the information that you're able to get yourself and not just fill things out without letting them know, and verifying it with them. So now, once you verify the basics about their house, you have all their information, you want to go over the coverage. So coverage A, dwelling, the reconstruction costs. So the reason you want to do all that the questions that you're asking about their house is so you could say, hey, based on all the questions I previously asked you, the reconstruction of your house is currently calculated at $500,000. So that way it doesn't seem like you're just getting this number out of nowhere. You're just pulling it out of a hat. It's just based on, and it's true, all the questions that you verified because of the square feet and because of the number of bathrooms and the quality grades and everything like that. You asked them. That's how we get this number. So doesn't seem to them like you just made up a number and just roundballing everything. This is an accurate reconstruction cost estimator that gave us this calculation here. So that's why I like to go over the details of the house. That's what we should anyways, but it will make more sense to them than rather just saying, hey, the reconstruction cost of your house is $500,000 without going over the details of the house first. Now, I feel this is a good question here, important question. How do you feel about that? Okay. The reason I asked that question is when sales, you kind of want to determine, there's so many different categories of people, but especially with homeowners insurance, there's just going to be 2 categories when it comes to pricing. Some are going to really care about the price as far as price sensitivity. They want to have something very cheap. And other people really value insurance and they want to have the right type of coverage. So how do you feel about that is a great question after you give them the reconstruction cost premium to kind of see which way they're going to lead towards. Some people are going to be like, oh, that's fine. Or some people may say, can you go lower? The company that I have, we offer kind of calculates the reconstruction cost lower to me. So that's why I want to also say, how do you feel about that? Because they may say, that seems a little low, or they're comparing their coverage and they may say that seems a little low. So I want to be open to letting them change it or increasing it if they feel more comfortable doing that. Now, also depending on where you live, I'm in Southern California here, so the reconstruction cost is a lot lower than the market value. So that's something that you may have to explain to some people too, maybe first-time homeowners, depending on their situation, but that's what we get paid to do, is to educate. So keep in mind that this is the amount to rebuild your home, not the amount to buy your home, not the amount you could sell your home for. This is an important factor when people feel like, oh no, my house is worth $2 million. But that's not the cost. And that includes, the nice weather or the nice school system or the low crime rates and just so many, how big the lot is. There's so much that goes into, and you guys know how to explain this, but I just want to go over with you because in Southern California, this is a major point where we have to remind people that this is strictly the amount to rebuild your home. So some people will want more coverage. It's like, this just seems too low. So what you want to do there is, that's why it's good to ask them that question. How do you feel about that? And if they say, hey, that just seems a little low, totally agree with it. Hey, yeah, to me, it does seem a little low too. What coverage amount would you feel more comfortable with? And you just don't want to be going against their will to go higher. No, that's trust me, this is going to be fine, because you just don't want, no one's going to want to buy from you if you're just trying to sell them something cheaper when they want more coverage. And what we sell is peace of mind. So, and frankly, sometimes I do feel like the reconstruction cost estimator is a little low. So if they feel like they want to go a little bit higher, totally agree with that, and then be open to showing them different amounts, but definitely let them know that you agree with the coverage, that it seems a little low. Separate structures, okay, explain to them what it is, everything on your lot that's not part of your house. 5% should be okay. Now, different rating systems obviously will have different options, but our company happens to offer 5% or 10%. Okay, so 5%, you can look at the pictures, should be fine. You could go over the options there, but you could look at the pictures and see if they have a pool or detached structures or shed or built-in barbecue, very nice fencing and landscaping. And you may want to, make a decision for them here a little bit to say, hey, a 10% will have coverage for 50,000. Or if you see that, the walls are this close to each other and there's really nothing there, then you could just say, hey, 5% should be good. And you shouldn't have to spend too much time on the separate structures, but letting them know that there's coverage there. Hey, so you're gonna have separate structures coverage for 25,000. This is gonna cover blah, blah, blah. Okay, in case something happens. It's always good to give them some scenarios for each product. Each coverage. Hey, reconstruction costs. This is an event we have to completely rebuild your home. Separate structure. This is in case, your fence catches on fire. Or, so you want to give them some scenarios, paint a picture and examples to help them understand what these coverages do. Personal property, okay, everything inside your house that you could take out. Well, not everything, because there's going to be some exclusions. 40% should be fine. Usually there's some policies about 75%. I think that's just a little too high for most people, but you want to let them know that. Explain to them the difference of replacement cost coverage. Now, that's something at our office we do go over and we recommend. And this is also another question here where you're going to find out, does this person care about price or does this person care about value? So the first question, if you still don't have a good idea, you could ask them, hey, for your belongings, do you want the depreciated value if something happened to it, or the cost to replace it brand new? And some people will know that, everybody will know that that's extra coverage that will cost more. So again, you're getting some good idea which way this person leans. By first couple of questions, you'll kind of know, but you'll still ask these questions to confirm, hey, I feel like this person just really cares about price, and this other person cares about these coverages. Loss of use, again, go over that. This is a great way to explain to them. Sometimes people don't even know they have these coverages. This is how much you'll pay up to in case you have to stay at somewhere else, in case you can't live to your home due to a claim. Let them know the default amount and how long it is for, and that should be fine usually. But letting them know that they have this coverage up to how much and how many months is really important, and they can increase it if they like. So wouldn't spend too much time there, but we have some great examples of our company doing a great job of loss of use coverage. So it could be a factor that you could talk about. Personal liability, let them know what it is. You guys know what it is. Give examples, slip and fall. Just go over some details there as far as what could happen. Insurance sometimes, I talked about it in some other podcasts, but it's, sometimes it's the sale of fear. So we're letting them know what could happen and paint a picture there and letting them know that this is how insurance could help you. 100K, 300K, half a million, doesn't make that big of a difference. Let them know that. And another great place here to see if they are, cheap or if they want more coverage. So depending on how they answer, you're pretty much going to have a good idea of what type of buyer you have here. But I'll give them the option, and could say, hey, the standard is 300K. We could go down to 100,000 or $500,000. Which one do you want to start off with first? And be open to letting them show different options. You don't want to make any questions seem committed. Like, which coverage options do you want to go with? Well, they're not going to know because they don't know the price difference. So questions are going to be more like, which one do you want to start off with? Which one do you want to see first? Rather than, hey, do you want to go with 300K or do you want to go with $500,000? It almost makes them feel like they're making a decision that they can't make because they don't have enough info. So I like to be more open-ended and give them out and letting them know that you're able to show them different options. And, more options they have, the better for our clients, our prospects. Alrighty, deductible options. Okay, as you can see, you have many options, but the option that is going to impact your rate the most is your deductible option. So you're setting this question, this portion of the quoting conversation up to let them know that, hey, we went over everything. Those are kind of things that won't make that big of a difference, but the deductible is going to make a big difference. So you want them to kind of be prepared to make a decision, or let them know that this is an important part of the conversation here. Let them know what a deductible is. Let them know there's two different types of people. Some people rather pay more in insurance. They have a low deductible because they feel they will be making claims often. So they may hear that and say, hey, yeah, I don't want to pay more insurance. While other people will rather pay less in insurance and have a higher deductible because they just want to have insurance for the major things, catastrophic things that could happen to their house. Now you're setting this question up because depending on your carrier, certain carriers are more competitive, different deductible options. And a lot of companies, you're going to be able to offer them a better price if they're okay with a higher deductible. Obviously, the choice is 100% theirs, but you do want to see. Sometimes you run into some really low deductible options that people already have, or maybe they're stuck in their ways and having a low deductible, and that could kill your deal because the pricing is so high. So you do want to explain to them how to lower their rates, and the least riskiest to me is the deductible, because worst case scenario, you're just paying a certain amount more, because if you decrease your liability or decrease the reconstruction cost, that could cost, the total exposure is so much more, tens of thousands, even hundreds of thousands of dollars. Or deductible, if you're raising it, a couple $1,000s, worst case scenario, you have to pay a couple $1,000s, which I feel is a little bit less riskier, and it impacts the premium more. This is in California, so you guys have to go with what your state percentage deductible and everything like that. But, here we say your average deductible is $2,500, but you could go higher to $5K or lower to $1K. I could show you different options, but which option do you want to see first? Again, we're not making them choose a deductible without seeing the price, because you never want to be in a situation where you say, hey, which deductible you want to go with? Okay, 1,000, boom, here's the price. And then the conversation just ends right there because it was just too high. So you want to be very flexible here and letting them know that you're able to show a lot of different options. And that way they feel very comfortable working with you, because some people may feel bad that you're taking their time to go over all these numbers. So you want to let them know very upfront that you're willing to show them, hey, I'm happy to show you different options. Which one do you want to start with? Almost with the expectation that we're going to show you multiple options, because you want to find a coverage that they're comfortable with, but also a price that they're comfortable with as well. All right, so smaller home, lower deductible is okay because it doesn't make that big of a difference. So sometimes we're steering that way. Hey, yeah, 1,000, it's not that much more than 2,500. So yeah, that looks good. But the bigger homes, if you want to close some bigger homes, you do want to stay away from the lower deductible options. Sometimes you could even let them know that how much they save and divide that by what the deductible option is. For example, like if you save, there's some situations where if you go to 1,000 to 2,500, you save like $500 a year, and the difference is only $1,500. So you could say, hey, if you think you won't make a claim every 3 years, which most people don't, then you save the actual difference. So you could do a little math, that's a pretty extreme there, but sometimes, it takes like 5 years to make up the difference there. Let them think about that, and those are good conversations to have. So you're letting them make educated decisions, and you're kind of establishing yourself as a professional there to let them know, hey, yeah, you're right. I probably won't make a claim every 5 years. And again, the worst case scenario, if you have to pay 1,000 or 2,500, I mean, it's not the end of the world to pay $1,500 more in case something, catastrophic happens. In fact, homeowners claims, sometimes water damage claims, they end up being really expensive. So when you're paying out $50,000 for a claim, what's the difference between, you paying out 1,000 or 2,500 in relative to the amount paid out? With homeowners insurance, more so than auto insurance, the deductible difference seems a lot smaller, but it does impact the premium. And this is just speaking of, my carrier, my experience. It could be different from yours, but letting them know what deductible options, I think, is something that we're helping the clients, because that's such a personal decision there in how you make financial decisions, that what we're doing here is just giving them the option and not letting them know that it's okay. A lot of people are, some people feel that way, like, hey, if when you say, it's the herd mentality, but yeah, the standard is this much, where it could be, 2% or something like that in your state. But the standard is most people get, but you can do and kind of lean them towards different options if they're not used to having higher deductible options. All right. So what we're doing here is a key point is after you go over all the coverage, then you give them the price. I think a lot of producers get in the mistake of just giving them the price first. But then if you're giving them the price first, it just becomes all about price. But if you go over the coverage first, then in their minds, what we're trying to do is saying that, hey, you get all this. You get the coverage A, you get the loss of use, you get the personal property, all this coverage that we just went over. It's a lot of coverage, and it could really help you out in case something happened. You painted all these pictures. You gave them so many what ifs and consequences of having lower coverage. So for all this, your price is this. When you do it that way, the price is going to seem a lot lower. If you just spit out a price for them from the beginning without going over the coverage, then the price is going to seem high and the conversation is going to be price-based. So go over the coverage in detail really good and well. And the better you do that, the price is going to seem very low because we're going to insure your home for, all in. It's not just a dwelling. All in is maybe double the dwelling of how much we're going to pay out potentially. And the price is going to seem very low considering how much the insurance company is responsible for. All right, now we're going to present the price here. How to present the price, okay. That's what we just talked about. Price will seem very low considering how much coverage you're giving them. After you give them the price, don't say anything. I think producers get in the habit of just over talking here. This is where you want to get into listening mode. You give them the price. It may seem awkward, but completely shut up until they say something. They're going to say something eventually because it could get awkward. So they're going to be like, that seems a little high. You said that if you increase your deductible, you're going to know how they feel. You want to know how they feel because that's going to help you close them or maybe they say, that sounds good. Sometimes producers that are talking over them, but I could, if it seems high, we could do, you don't know what they're thinking. Maybe they're thinking, oh, okay, I'm ready to go. This sounds good. And you're just kind of sometimes unselling it or making it the sales process longer than it should be because you're just blabbering off about different benefits that they don't even care about. Say the price, don't say anything, see what they say, understand how they're thinking, and base your conversation from there on out based on that. Okay, based on what they say, try to get a good understanding of what they're thinking and respond to that. Be open, ask them if they want to see any other options that you just went through. And this is where the current situation, you're going to use that. Okay, so remind them. So I know you're in escrow. I know you got a lot of things going on. So I could take care of this for you. Okay, so you can get it over with. So you can focus on the other 300 things you have to do on your to-do list when you're buying a home. Or, so understand your renewal's coming up on August 20th and your rates are going up. Okay, what we could do is set this policy up as of August 20th so you don't have a lapse in coverage, and I'll notify your mortgage company. Let them know what their situation is again, why they're shopping, and how you're going to be able to help them out again here. So you remind them the whole reason they are shopping for homeowners insurance in the first place, because you're going to use them. Hey, they're going to be thinking, hey, that's right. He knows or she knows what my situation is. He or she is going to solve my problem. I'm going to set it up with this person, because you sometimes have to remind them why they're shopping and that you could help them out. And you're going to use that as your close. Get an agreement and recap the coverage quickly. Boom, 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 boom. Always do a recap and their deductible and get agreement. So I just want to emphasize again, knowing their current insurance situation is so important when it comes to closing any type of insurance and using that as an angle to close the deal. Set that up early where you understand the situation. And then sometimes that's a skill, for people to open up. But they say, hey, if you want to close somebody, you got to open them up first. And reminding them right there after presenting the price is a great time to use that to your advantage to be able to close the deal. All right, closing time. So we'll go over the close here. But if you can't, for some reason, I got to talk to my wife or blah, 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 or whatever the objections you get, whatever it is, if you can't close it for that, there's just other objections based on that, but that could be a whole different video. But for now, if you can't close it, then you want to update your lead management system. So if it's a new purchase, ask them who their loan officer is, who's requesting their insurance information, and let them know, okay, since you got so much going on, I am going to handle the whole insurance situation for you. A little bit exaggerated here because it's not that hard, but you're going to say, I'm going to work with them to provide them your insurance just the way they need it. Okay, sometimes you know how they are. They may say, hey, it's ISLA, it's not ATIMA, and then they may change the effective date 10 times on you. So there's a little bit of work involved here. But you're going to say, I'm going to get the mortgage information, your loan number, your vesting, the date they want your policy to start, and I'm going to take the payment from them. Sometimes when you're buying a house, your confidence and certainty that you'll get the insurance part done is the most important thing they want to hear, even more than the price sometimes. I want to take care of everything for you. I'm going to coordinate with them. I'm going to work with them. Really, just getting the evidence of your insurance and sending them over to them. But I'm going to contact them and I'm going to work with them to get their insurance just the way they need it to make sure you close on time. That's what they want to hear. You want to have that confidence and certainty that you'll take care of everything. They don't have to do anything. I'll collect the payment from them. Again, they don't have to do anything. All you got to do is e-sign, DocuSign some documents. You just want to make it so easy for them and make it sound it is because it is. That you'll take care of everything. So that way they'll say, okay, this guy's know what he's doing. This gal knows what she's doing. I'm going to go with them because they do frankly want to move on, deal with other stuff that they have to when they're buying a house. So you want to just be the checklist be the person that could get that off their checklist. Okay, the last thing we want is your home not to close on time because they don't have the necessary evidence of insurance. I'm always working. I'm always on time. I always look out for evidence of insurance. I send out evidence of insurance every day. Let them know that you know what you're doing and the certainty, again, that you'll help them close is something that you want to use to get the new purchase done. All right, and then another thing you could do here, okay, is to get the loan officers or escrow officer or real estate agents' contact information yourself. Now, sometimes you could play cool, and I used to do this, is like, okay, well, forward my contact information to them and I'll have them reach out to me. So that's if you're a little bit advanced sales agent and if you feel a little very confident that you got the deal, but there's a chance there that they may contact the loan officer and they may say, hey, I got somebody for you that could give you a homeowner's deal. Why don't you compare it? Or, they forget or their spouse is shopping somebody else and something can happen along the way where you may not get them to contact you. So I think that's a little bit too overconfident way of selling. What I tell my producers to do is get their information. Okay, get their information. What's their information? I'm going to coordinate with them and I'm going to take care of it with them because once you do get their information, to the buyer, it seems like the deal is done. Like it's closed. Like they don't have to do anything else, so they got it over with. And it seems more committed because you got their information, you're already coordinating with them already. So that there's a little harder way to back out because if you didn't have the contact information, you're waiting for them to contact you, the deal may not be done. So if you get that's really the close is to get their information because once you get that, then it's like a done deal. So remember to always get their loan officer, escrow officer, or real estate agent, whoever's asking for the insurance information yourself. So that way you could be proactive in letting them know, hey, I'm the insurance agent that's going to help you, provide evidence of insurance for Mr. Blah, blah, Mr. and Mrs. Blah, blah, blah at this street. So yeah, just need a request of EOI. Whenever you have it ready, I'll be able to provide it for you. And you let them know that you're going to take care of it. And by getting their information, that's really the close. Once you get that, it's pretty much off their plate. And they'll probably move on thinking that, hey, I took care of this, which they have. So there's less chance of something going wrong and not getting a sale because you didn't ask for their information. So that's how I like to close new purchase policies. If it's not a new purchase, confirm the effective date of the policy. Okay, do they need to get insurance right away? So you want to confirm the effective date. Are they shopping because of the renewal or non-renewal situation? So August 25th, let's say. You want to confirm the effective date. And the most important question we need to ask here is, how is your homeowner's insurance paid? Okay, is it through your escrow account with your mortgage company or do you pay directly to your homeowner's insurance company? You got to know that. That's the important question because if you don't know that answer, then you don't know how to close them. So you want to obviously ask them that question directly. Sometimes they say, hey, it's paid by the escrow company, but I want to pay for myself. It's like, well, you got to, set that up with them. So you got to work with them with that. But you do want to know how it's set up right now because based on that information, if the mortgagee pays, what you want to do is just get the mortgagee company's name, their loan number, and then contact the mortgage company yourself and get the payment. You don't want to ask for the mortgagee clause. Hey, what PO box is it? Like, there's just too many questions. You just want to, again, make it as easy as possible. You could get the mortgagee clause from them. I had a producer that worked from a different agency and they was like, oh, I need the mortgagee clause. Like, well, let's not have them gather all that information up. We just need the mortgage company's name and their loan number. Let's do everything else. We don't care if it's ISAOA or ATIMA and then all these other acronyms that you have to write down. Let's not get into the weeds there. Let's just make it simple for them. You're going to contact them. You're going to get the payment. Maybe you may have to conference them in. Let them know that you may have to, but try to make it as easy as possible as getting everything done for them. If it's not mortgagee pays, go over payment options and buying. Pretty simple there. Okay, annual, monthly, EFT, all that good stuff. And take the payment and you got to sell there. All right, so benefits of choosing you. Let's go over your company's financial strength. You don't want to just say these randomly, but throughout the conversations that we just went over, maybe the coverage options or maybe the reason they're shopping, your company's financial strength, I think, is an important one. Now, if you're getting liability only on auto insurance, they probably don't care about that. All we're going to do is pay the other person that you hit. Now, this home is the biggest asset that our client owns. So you gotta sometimes remind them, hey, the whole neighborhood goes down. We have the financial strength to rebuild your whole neighborhood. Let them know that financial strength of your company is important. Okay, your company's claims department, the claims department's history. I think that's also an important factor to consider. Your company's multi-policy discount percentages. Some of us has really deep multi-policy discounts, so let them know, and maybe you could quote this during that time. Sometimes, depending on their situation, they're just going to want to focus on homeowners insurance. That's fine. I don't force my producers to always have to sell both at the same time because that's just not what the client wants at this time. But you do have to mention this and let them know in the future we could help you save money by, in getting their auto insurance X date. But letting them know about the benefits there is great. Ease of doing business with your company. And some companies require more inspections, some companies offer less. So whatever you have some benefits or some advantages, let them know that. Your company's underwriting. You'll have me as your personal agent. I'll be texting you my number here. So if you have any questions, let me know. These are all great things that you could promise them. And then your home is your biggest asset. Protect it with the best company. So obviously, if you're in the insurance business, you got to believe in the products you sell. So letting them know that, hey, this is a big, important decision. It's a good thing you're doing with a great company and a great insurance agent like me. So letting them know that you're making the right choice and having the confidence that they're protecting their asset with a great company is a very big part of selling homeowners insurance. All right, if you have any questions, please put it in the comments below. Also, if there's any tips or strategies that I missed or something that's worked well in your state or anything you want to share, lead vendors, anything based on homeowners insurance, I really want to learn more about how to sell more homeowners insurance. Our agency is kind of trying to transition more to homeowners insurance and auto insurance. So any tips, strategies, and tactics you have, please put in the comments. I just want to have a culture where we can learn from each other. So I'm really excited to hear from you guys. All right. And then thank you for watching. Hope this helps you guys sell more homeowners insurance. Until next time, let's get it. Stay hungry. Thank you guys.